Hello, you're welcome to my channel. Today I'll be talking about income tax declaration in Estonia. So this is a very short video, but I promise there are a lot of things you'll learn from this video. So I'll be talking about who is expected to pay tax and who is a tax resident according to Estonian taxation law, what is the statutory period of tax declaration, what can you deduct from your earning before you declare your profit, and also what can you not deduct from your earning before you declare your profit. And another important part of this video, I will talk about what has changed in the tax declaration pattern or methodology of Estonia. And finally, I will talk about two key obligations for tax residents. Hello, you're welcome to my channel. Today I'll be Do you know that in Estonia, as well as in many other jurisdictions, tax evasion is a criminal offense punishable with up to 5 years imprisonment? Yes, you heard me right, with up to 5 years imprisonment. So what do we mean by tax evasion? Tax evasion simply is the art of evading taxes. When a taxpayer hides his or her earning from the tax authority, the person is evading tax, and this is a punishable offense. First, we can ask the question, who can pay tax? Who is liable to pay tax? And this question is answered by Section 31 of the Estonian Taxation Act, which states that every tax resident is liable to pay tax. If you're a tax resident in Estonia, then you are liable to pay tax. So how is tax resident defined? So tax residency is defined in Section 6, paragraph 1 of the Estonian Income Tax Act. And this section states that if you live in Estonia for a period of 183 days in the span of 12 calendar months, then you are a tax resident. Let's say you live in 12 months, you've stayed in Estonia for 183 days, then you are liable to pay tax, to pay your tax. So, tax residency also can be defined in the light of the general part of the Civil Code, Section 24 and 25, which states that a legal person can also be a tax resident. Another important part of the income tax declaration is knowing what to declare, knowing what to deduct, and knowing what not to deduct. So first, let's look at knowing what to declare. And the question of what to declare is answered by Section 12 of the Income Tax Act. And Section 12 says that you have to declare all taxable income. By all taxable income, Section 12 means that you have to declare income earned from your business, income earned from transfer of your property, income earned from employment, income earned from your pension, income earned from winnings from gambling, and all the sort. So all these things, you have to declare it and pay taxes on them. So another question is, what should you deduct? And here you can deduct all certified expenses that you made while running your business. And this you can also deduct all expenses that you made while expanding or maintaining your business. So although in some cases there are certain little restriction on the amount that you can deduct in many cases, so you have to check more or make a bit of research to know exactly what are the restrictions on certain amount that you need to deduct. And this is the big part. What can you not deduct? A whole lot of people find this place confusing. So the first thing you cannot deduct is any tax that you pay. So when you pay taxes, you cannot deduct it from your earning in the coming declaration. Also, if you pay any fine as a result of non-compliance to the law, then you cannot deduct it. Let's say, for instance, you're a taxi driver and you break traffic rule all the time and you're given a lot of fine by the police, then you cannot declare these fines that you've paid, although it was paid in the course of doing your business, but you cannot declare them. So Another thing is that if like you default in your obligation and your property gets seized, the loss you incur through the property that got seized cannot be declared, and you cannot also declare all miscellaneous expenses that are not subject to income tax. So these miscellaneous expenses which are not subject to income tax cannot also be declared. And in case you give gifts and donations to people who are close to the taxpayer, then you cannot deduct this from your earning when doing tax declaration. Although there is an exception to this, especially when this gift and donation is given in a bid to advertise your product or your company. So section 33 paragraph 3 gives some soft landing that can help you, like put some little amount, not the whole in this case. And you can also deduct tips and even bribes that you give out while doing business. This is a no-no. You cannot deduct this from your earnings. So what has changed? Answering the question, what has changed? Previously in 2021 and 2020, you will have to put the total amount you've earned and make your deductions. But in 2022, maybe not for everybody, but the tax office will have a pre-filled template of all your earning, especially when you work with all these ride-hailing company or food delivery company. There is a pre-filled template. If you've given your consent to this, that means there is a pre-filled template that captures all your earning for 2022 taxation year. So you cannot afford to make any mistake. Now, something happened in the years back. For one reason or the other, somebody's account got closed by one of the banks. So what happened if like your account gets closed and you couldn't find certain receipt of maybe the certain expenses that you've made? I have a tip to give you, and I believe this will work. You can as well write the ride-hailing company or the food delivery company requesting for same information that was sent to the tax office, and they are under obligation to give you such information because section 15 of the GDPR concerning the right of a data subject mandate that if you request for such information, it will be given to you. So you can try this. Request the ride-hailing company or the food delivery company to give you a copy of the information that has been transferred to the tax authority, and I believe they can give you this, and with this you can find a way to harmonize your expenses and your income and make your tax declaration. The essence of all this is that you follow the legal path and make your declaration as it ought to be, so as not to be punished for doing the wrong thing. So lastly, we'll talk about the obligations that you have as a tax resident. After declaring your income tax, to you perhaps the journey has ended, but it doesn't end there. You have other obligation. First is that you have the obligation to keep the documents that you've gathered, all the expenses you've made. You have the obligation, according to section 58 of the Income Tax Act, you have obligation to keep this document for a period of at least 7 years. So after declaring your tax and getting your tax return, please do not throw those documents away. It will be needed in case the tax office decide to audit your tax receipts and everything. They will request for this information, and you have obligation to protect these documents and to give it to them when they request for it. Please do not throw them away. I know this is just a bit of information, and there is a whole lot of other information that might be needed. So please like my page, subscribe to my channel, and tell me if there is any other area that you would like me to touch. Then I will try as much as I can to bring a little information of what I know through this channel. Thank you very much for listening to my video. See you in my next video.